Alright everyone, welcome back to Living Limitless. I'm your host, Sergio Boros, and I am absolutely thrilled you're here today because we're about to unpack some seriously game-changing stuff. If you've ever felt like the world of finance is evolving at lightning speed, with new technologies popping up left and right, well, you're not wrong. But here's the good news. With change comes incredible opportunity, especially for those of us looking to build serious wealth and secure our financial future. Today we're diving deep into a topic that's on everyone's mind. The future of money, how AI, crypto, and tech can build your wealth. Now I know what some of you might be thinking, AI, crypto, it can all sound a bit intimidating, maybe even a little bit like science fiction. But trust me, these aren't just buzzwords. These are powerful tools that are reshaping our financial landscape. My goal today is to cut through the noise, break down these complex subjects into simple, actionable insights, and show you exactly how they can fit into your wealth-building strategy. So if you're ready to get a clear picture of what's coming and how you can position yourself to benefit, you're in the right place. Make sure you stick around because we'll be exploring these emerging financial tools, looking at the real-world applications, the potential rewards, and just as importantly, how to navigate the risks involved. Let's get into it. Alright, let's kick things off with artificial intelligence, or AI, in the world of investing. AI investing uses smart software and algorithms to analyze financial data and make decisions. Think of it as a powerful assistant that helps you spot opportunities and manage risks. AI can analyze massive data sets in real time, from stock prices to social media trends. It identifies patterns and correlations that humans might miss. Robo-advisors like Betterment use AI to create and manage portfolios tailored to your goals. They offer low fees, accessibility, and features like automatic rebalancing. Advanced AI tools also assist in active stock selection, analyzing company fundamentals and market sentiment. AI is your new secret weapon for smashing investment goals. Alright, let's switch gears and dive into the world of cryptocurrency. This is a topic that generates a ton of excitement, a lot of confusion, and sometimes, let's be real, a bit of fear. So, what even is cryptocurrency? At its most basic, it's a digital or virtual form of currency that uses cryptography, hence the name crypto for security. Unlike traditional currencies issued by governments, like the US dollar or the euro, most cryptocurrencies are decentralized, meaning they aren't controlled by any single entity like a central bank. This decentralization is a key concept we'll keep coming back to. The foundational technology that makes most cryptocurrencies possible is called the blockchain. Now, blockchain can sound super technical, but think of it like this. It's a shared digital ledger that records every transaction. Imagine a giant public notebook that everyone in the network has a copy of. When a new transaction happens, it's bundled together with other recent transactions into a block, which is then cryptographically secured and added to the chain of previous blocks. This makes the record permanent, transparent, for most public blockchains, and incredibly difficult to tamper with. The original gangster, the one that started it all, is Bitcoin. Created in 2009 by the mysterious Satoshi Nakamoto, whose true identity is still unknown. Bitcoin was envisioned as a peer-to-peer electronic cash system, a way for people to send and receive value directly, without needing banks or traditional financial intermediaries. One of Bitcoin's defining features is its limited supply. There will only ever be 21 million Bitcoin created, which is why some people refer to it as digital gold, a potential store of value that can't be inflated away by a central authority printing more money. But Bitcoin is just the tip of the iceberg. After Bitcoin's success, thousands of other cryptocurrencies known as altcoins, alternative coins, have emerged. One of the most significant altcoins is Ethereum. What makes Ethereum different is that it's not just a digital currency, it's a platform for building decentralized applications, dApps, and smart contracts. Smart contracts are self-executing contracts with the terms of the agreement directly written into code. This has opened up a whole new world of possibilities, from decentralized finance, DeFi, to non-fungible tokens, NFTs. And then there are countless other altcoins, each with different purposes. Some are utility tokens for specific platforms, some are governance tokens giving holders voting rights, and yes, some are purely speculative meme coins, which you need to be careful with. So how do crypto transactions actually work? To send or receive cryptocurrency, you need a digital wallet. These wallets don't store your actual crypto, that lives on the blockchain, but they hold your private keys, secret codes that prove your ownership and allow you to authorize transactions. Your wallet also has a public address, which is like your bank account number that you can share with others to receive funds. It's crucial to understand the difference between hot wallets, connected to the internet, more convenient but less secure, and cold wallets, offline like a hardware device, much more secure for storing larger amounts. And the golden rule here is, not your keys, not your crypto. If you don't control your private keys, you don't truly own your cryptocurrency. Why is crypto gaining so much traction? Well, there are several reasons. The potential for high returns is obviously a big draw, though it comes with equally high risk, which I can't stress enough. For some, crypto, particularly Bitcoin, is seen as a hedge against inflation or economic instability, a way to preserve wealth outside of traditional financial systems. The appeal of decentralization is strong for those who are wary of government control or censorship. And undeniably, there's a huge amount of innovation happening in the space, with crypto and blockchain technology being explored for all sorts of applications beyond just currency. Now, we absolutely have to talk about the risks, and the biggest one, spelled out in capital letters, is volatility. Cryptocurrency prices can swing wildly, sometimes by huge percentages in a single day. This is not an asset class for the faint of heart, and you should never, ever invest more money than you can afford to lose. It is not a guaranteed path to riches, and many people have lost significant amounts of money by speculating recklessly or getting caught up in hype. Alright, let's switch gears and dive into the world of cryptocurrency. This is a topic that generates a ton of excitement, a lot of confusion, and sometimes, let's be real, a bit of fear. So what even is cryptocurrency? At its most basic, it's a digital or virtual form of currency that uses cryptography, hence the name crypto for security. Unlike traditional currencies issued by governments like the US dollar or the euro, most cryptocurrencies are decentralized, meaning they aren't controlled by any single entity like a central bank. This decentralization is a key concept we'll keep coming back to. The foundational technology that makes most cryptocurrencies possible is called the blockchain. Now, blockchain can sound super technical, but think of it like this. It's a shared digital ledger that records every transaction. Imagine a giant public notebook that everyone in the network has a copy of. When a new transaction happens, it's bundled together with other recent transactions into a block, which is then cryptographically secured and added to the chain of previous blocks. This makes the record permanent, transparent, for most public blockchains, and incredibly difficult to tamper with. The original gangster, the one that started it all, is Bitcoin. Okay, let's talk about something that's probably already in your pocket, and has the power to revolutionize how you manage your money: fintech apps. Fintech simply stands for financial technology, and it encompasses a massive range of applications and services designed to make financial management easier, more accessible, and often much cheaper than traditional methods. Your smartphone, thanks to these apps, is no longer just for calls and social media. It's a bona fide wealth-building machine if you know how to use it right. The convenience and accessibility these apps offer are truly a game-changer for personal finance. One of the most fundamental areas where fintech apps shine is budgeting and expense tracking. Apps like Mint, YNAB, You Need a Budget, or Personal Capital can securely link to your bank accounts and credit cards, automatically categorizing your transactions, and giving you a clear picture of where your money is actually going each month. Seeing it all laid out visually, how much you're spending on groceries, entertainment, subscriptions, can be incredibly eye-opening. This awareness is the absolute first step to taking control of your finances and identifying areas where you can cut back and save more. Then there's the magic of automated savings apps. Platforms like Acorns or Digit are designed to make saving effortless, almost invisible. Acorns, for example, has a popular feature that rounds up your purchases to the nearest dollar and invests the spare change. Digit uses algorithms to analyze your spending patterns and income, then automatically transfers small, safe amounts of money from your checking account to your savings. These set-it-and-forget-it approaches are fantastic because they overcome a lot of the psychological barriers to saving. The money is saved before you even have a chance to miss it or spend it elsewhere. For those looking to start investing, fintech has blown the doors wide open with beginner-friendly investment apps. Think of platforms like Robinhood, Webull, or SoFi Invest. Many of these apps famously offer commission-free trading for stocks, ETFs, and sometimes even options in crypto, though always read the fine print about how they make money, like through payment for order flow. A huge advantage they offer is the ability to buy fractional shares. This means if you can't afford a full share of an expensive stock like Amazon or Tesla, you can still invest with as little as $1 or $5, making diversification accessible to everyone, regardless of their starting capital. We touched on robo-advisors in the AI chapter, but it's worth highlighting them again here as a key category of fintech apps. Platforms like Betterment and Wealthfront offer a fully digital, algorithm-driven investment management service right on your phone. You answer some questions about your financial goals and risk tolerance, and the app constructs and manages a diversified investment portfolio for you. The user experience is typically very slick and intuitive, making sophisticated investing strategies accessible without needing to be an expert yourself. They handle rebalancing and can offer features like tax loss harvesting, all through a simple app interface. Fintech isn't just about growing your money, it's also about managing the other side of the equation, debt. There are apps specifically designed to help you tackle your debts more effectively. Some apps help you create a debt payoff plan using strategies like the debt snowball or debt avalanche method. They can help you track your progress, stay motivated, and some even offer tools to help you find options for consolidating your debt or refinancing at lower interest rates. Getting out of high-interest debt is one of the best investments you can make, and these apps can be a powerful ally. And of course, we can't talk about fintech without mentioning peer-to-peer P2P payment apps. Services like Venmo, PayPal, and Cash App have completely changed how we send money to friends and family, pay for goods and services, or split bills. And that's a wrap for today's deep dive. Thanks so much for watching this episode of Living Limitless. We've covered a lot of ground, from harnessing the power of AI to make smarter investment decisions and potentially maximize your returns, to understanding the fundamentals of cryptocurrency as an emerging and yes, volatile asset class, and finally, leveraging the incredible convenience and utility of fintech apps to manage every aspect of your financial life right from your smartphone. My hope is that you're walking away from this feeling more informed, less intimidated, and genuinely excited about the tools available to build your wealth in this new era of money. If you found this information valuable, and I really hope you did, please do me a huge favor. Smash that like button, make sure you're subscribed to Living Limitless, and definitely hit that notification bell. By doing so, you'll be the first to know when we release new videos packed with more insights, strategies, and practical advice on building your wealth with the latest financial tools and navigating the ever-evolving economic landscape. We're building a community here of like-minded individuals all striving for financial freedom and a limitless life, and I'd love for you to be a part of it. Remember, the future of money is already here, and the power to shape your financial destiny is increasingly in your hands. Don't be afraid to learn, to explore, and to take calculated steps towards your goals. If you have any questions about what we discussed today, or if there are other financial topics you'd like to see me cover, please drop a comment down below. I read as many as I can. Thanks again for tuning in, and I'll see you in the next video.